All right, I'm live. I'm live on YouTube. So Periscope. I'm doing Periscope, yo, YouTube. And this, it's a little late, is the Let's Talk Stock Show. I'm on Periscope streaming as well, so you can find me over there. I think it's at EMIP TV. Is that right over there on Periscope? So we're going to do Periscope and we're going to do YouTube. And Periscope's kind of got more behind the scenes. I wasn't ready for my stream. I can't find my, hold on, I gotta get my, I won't be able to take your comments if I can't get this going up. Alright. If you got any comments, I guess you can go ahead and put it on Periscope. I'll try to see you, but it's best if you're on YouTube. And here we go. Alright, I'm looking good. Alright, so the market is up. Yes, unbelievable. But you know, I mean, like, it's up for how long? I mean, 354 points sounds like a lot, but you know, we was down like 600, it was down like 700 points yesterday. You know, so you, in reality, it's not that much. It's kind of snapping back a little bit. What disturbs me, what bothers me about this particular rally is the VIX. Okay, so let me bring up the chart of that real quick. And see on Periscope, if you're watching me over there, you can't see the charts, but I'll talk about it. So I'm bringing up the VIX. Let me bring up the 5 minutes. TJ Jones, TJ the Bull in the woods. What is up? What's up, TJ, man? It's been a while. So we talking stocks, of course. I ain't do much today. Here's the VIX. Here's the VIX for today. It's kind of just chilling. You know, it's only down 13%, which is big, but it, you know, the market is up 354. The market is up, I think, damn near 2%, right? So, bring up the SPY real quick. It's up 1.42%. It really, the VIX is not plunging. You want to see that really, that good drop in the VIX, you know, a good 20%, you know, where it's just going down like that constantly, and you know, I don't see it. So we got above yesterday's open, which is good. You know, I don't know how high we are gonna go, but if you look at this chart, this is a 30-minute chart, and just kind of look at the pattern. Look at what's been happening with SPY. So, boom, you know, drop down. I'm way over here on May 6th. You know, so it gaps down, goes up. Next day, gaps down, and it kind of trends down. The next day kind of goes up. The next day gaps down, trends up. The next day gaps down, trends up. The next day gaps down, trends down. Now it's going up, and then what do you think is next? Most likely, probably a gap down. So that's why I'm still not feeling it. You know, the tariffs, it went down for tariffs yesterday. Guess what? Tariffs are still in place. Yeah. So, you know, I don't really like to trade about news, but the tariffs are still in place, so we have to, until that changes, I mean, how could the market really reach new highs? The market spoke yesterday. You know, it said, we don't like tariffs! That's what it said, and let's see what happens. I mean, if you look at the weekly, this is constructive. That looks pretty good. It's, you know, it's trying to make a comeback. I drew the Fibonacci. I guess I had to delete it. Let me bring it back. Let's draw a quick Fibonacci. It won't be exact. And you see how we bounced off that 23.6. And that's a pretty good bounce. But generally, that's a 5% pullback. Generally, we don't usually bounce there. We usually go a good 50% retracement would be a nice little pullback. You know, and that's huge. You see how far down we can go with a 50% retracement. Let me bring up the SPX so I can talk SPY numbers. Let's get rid of that. What kind of fib is that? Let's clear drawing. Alright, so let's talk the fibs on the SPX. So if we went down about 50%, we're talking like 2650 level. I was thinking more of the 38.2 on the Fibonacci, because right here we still have all that congestion. That is perfect, you know, support. That congestion to the left, you know, that is basically some buyers, you know, might be sitting right there. So that's where I think we are kind of headed. But if you look at the 23.6, I mean, that's a great candle. It's a weekly candle. The weekly candle is not drawn yet because it's only Tuesday, so let's see how the rest of the week, plays out. So, Apple, we'll talk about Apple real quick. Apple's doing not bad today, but it was down about 7% yesterday. Look at that candle. Like, Apple was down like the biggest in one day. Let me get a daily chart. It's like in a long time. So it's trying to make a comeback from that because the tariffs are really going to affect Apple. They make all that phones and stuff over there. $1,000 phone with a 25% tariff is $250. They can't really eat that cost. They can, but they won't be really making money. They pass that cost along. Now the phones are going to be $1,200. So Apple's got problems, and so that's why Apple's just getting hit hard. It's a little snapback today, but I don't know. I don't think Apple goes way down. They got huge buybacks in effect. I think they'll figure it out. I think the government will figure it out, even though I don't like talking news too much, but they got to. But if the government for some reason don't figure it out, maybe Apple will be in trouble. All these phones, everything is over there in China. The tariffs, Trump put the tariffs on. He's punishing Apple, even though he says, oh, China's paying. No, China's not paying, Apple's paying. And Apple's not paying, the consumer's paying. Yeah, that's right. That's who's paying on the tariffs. Anyway, so that's Apple. I didn't even look at my favorite stock, which is Chipotle. Oh, 720. Wait, oh no, okay, 705. That is a pretty good run. This I like, and I knew I should have sold some puts yesterday on it, but I was so afraid, and I'm still kind of afraid that we're just not done yet. It could fake out everybody and continue to go down. But why? The tariffs is in place. I just can't see us reaching all-time highs. I just can't do it because this is why it went down to begin with. How's my mic? Can I get a mic check? Test 1 2. Test 1 2. Can I get a mic check? Somebody just say yeah, because I have mic problems in the beginning. So we'll talk about the SPX. Double D did a trade yesterday, and I kind of took the style. I sold some way out short term this Friday out of the money calls. I sold the calls because I think even though we're coming up, volatility is still kind of high. It didn't drop completely. I just showed you that was in the VIX. But if you see how this is trending a little bit, I got the wrong drawing up. Even though it's not the greatest trend line because we cut through right here and here, but you just see this, up, there it is. And I think we're going to just see that next drop, and who knows, it's going to be a tweet. This market is so news related. I never seen nothing like that, where it's not even news, it's tweets, right? This tweet, oh, it's up, it's down, it's up. But you know what? To this point, they all been lies. That's why it's down, because the tweet used to be good. Then all of a sudden it's down. Oh, we're gonna have a trade deal. It's working good. We're gonna sign, and everything just falls apart. And 25% tariffs and blah 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 blah. And now he's talking about an additional 25% on another $300 and something million worth of goods. Yeah, this is not good. Those are not good. There's so many uncertainties, and markets can't go higher with uncertainties. Look at me talking fundamentals. I gotta stop doing that. So, because it could kill you. The fundamentals are already in the charts, and if you just look at what's going on, one of my favorite charts to look at, even though this is a great bounce off this Fibonacci, so we might just get, I don't want to clear that. I guess I'll clear all the drawings. Maybe redraw the Fibonacci again. Yeah, we might just get a legitimate bounce right here. I mean, we do have support right there. Well, right there. I'm still liking, this is the SPX, the 38.2. I'm liking down here a little bit. And we'll see what happens. That's a great candle. So anyway, an options trade. I'm just checking out the Periscope. EMIP TV on Periscope. This is Dre on YouTube. Y'all already watching. Any stocks you want me to talk about, throw them in the comments, man. What are you doing? What are you trading? So, trading. I got some positions on. I was messing around with a short term. Now I'm gonna try to. Normally I was like, I talk to you guys like maybe you know, but you might not know. This could be new to you. So the options that I'll try to talk basic, but it's gonna be a little advanced because, Anyway, the options on the SPX that expire on this Friday. I was messing around looking at different trades of what I can do. A lot of people don't like the real short-term options because of something called gamma risk, which means the price, little increments in the price, I believe, can really change the value of the option because it's going into expiration, and it could just change just like that. But if you look at some of the calls, let's see, this is the delta. Okay, delta represents how much that option will change relative to every dollar in the price of the stock. But we also, it's very close to the probability of being right. So a lot of people use the deltas. It's not exact, but it's pretty damn close. So the delta means if I sell this 12 delta, that means it's a 12% chance of that option not expiring. I should say, not expiring in the money. Meaning, if you flip it around, there's an 88% chance that it expires out of the money. So that's a good deal. That's a good deal, right? 88% chance. We'll take that all day. So if we sell that option, I'm just going to sell it. It's 235. We're going to make, basically, we're going to get a credit in the account right now of $225. That's great. As long as the S&P stays below 2,900. Let's look at the chart real quick. 2,900. I'll go ahead and draw a line pretty close to right here. Oh man, I got the wrong thing on. Now bear with me. I'm kind of starting from scratch from what I'm going to do, right? So basically, if we could stay below that line by Friday, today's Tuesday, we get to keep that whole $225, right? So if you put the trade on, it says here, oh, it's not telling me. Basically, I wanted to, it's basically the margin. Oh, the margin for this account. Could I open up this one? Oh, let me see something. Yeah, it's not telling me what the margin would be. To tell you the truth, I don't know what the margin would be either. So basically, if you had a big ass account, you could do that just as it is. But we don't. So we want to go ahead and sell a vertical, meaning we want to buy an option below that. Okay, so let's buy the 29.10. Okay, so I'm going to put it down here, 29.10. And that's protection, right? That's basically saying I'm not going to get blown out of the position, So still saying illegal. It's not doing what I want it to do. Oh, there, yeah. Max lost $900. All right. So anyway, I'll go ahead and talk you through it. So if you sell the 2,900, right, and then you buy the 29.10, that's $1,000. You could lose $1,000 on that trade because it's $1,000 worth of risk. But we're collecting $1 to do that right now, $1. So that means it's really only $900 worth of risk. So are you willing to risk $900 to make $100? Well, let's see what that is. $100 divided by $900 equals 11%. So basically it's 11% on your money by Friday of 3 days. If you would annualize that, every 3 days you're making 11% on your money, you'll be super rich. I don't even know what it is annualized. Let me see, every 3 days, let's see, I think I could do, let me see, if this 356 days divided by 3 equals 118 11-day periods times 11, something like 1,300%. If I did that right, if I annualized that right. So, yo, what's up, Double D? I'm talking about the trade that you did. I'm talking about SPX trade, a short term, but ending Friday. So we're looking at this 2,900, 2,910, risking $900 to collect a dollar, right? So in this trade, that's an 11% on your money. It's not bad. I mean, look, the delta's 11%. There's a 89% chance we're gonna be right. You know, now look, it's already going down, $95. So this is only in 3 days. It's actually a pretty good trade. If somebody would say, hey man, give me $900 and I'll give you, because you're going to make 100, I'll give you your $900 back by Friday and I'll give you $100, right? $100, let's give you $100. You'd be like, all right, you got to trust the guy. You know, say you trust him. I'm like, yeah, all right, here's $900. By Friday, I'm going to get $1,000. Because that's basically what's happening. You know, but the market, will it crash up on you? So here's what it looks like, Double D. There's that line. That's the $2,900 line. Here's where we are. Let me pull up the daily. It'll be a little better. Will we get above that line by Friday? Will we crash up? You know, the way we crashed up right here and right there, possibly. But I feel that with the tariffs over our head, we probably won't. We probably won't, because I have a feeling we're just going to kind of go sideways, because the market is waiting for news. It's waiting for the next tweet. You know, so it won't. It too, bro, 15%. I want it too. Are you talking about that trade from yesterday? Because, yeah, I can't remember. You said you want it 15%. Well, anyway, Periscope. I'm on Periscope. Hey, Periscope followers, we're doing this live on YouTube as well. This is Dre on YouTube. So anyway, this is pretty good, 11%, and you can put the trade on. It only costs you $900 in margin, you know, and there it is, and you just sit there and wait. Now, to increase your chances of success, you might not want it to go to, you might not want to let it go to zero in value, because the expire worthless. You don't have to put another trade on, and you got the money, and that's that. You got the $100, and you get to walk away. But if for some reason it would run above that, or start to run at the same time as time decaying, can we analyze this real quick? What is that trade? I'm kind of all over the place. Oh, it's down to 90%? We'll make it 95. Yeah, we'll make it. So anyway, what was I talking about? Oh, so if you look right here, the thing is losing $32 a day, right? And that's about right. It's not linear, okay? So tomorrow it might lose 40, and then the next day it might lose 50, but or something like that. Let me see. You can test it right here by moving the calendar. Tomorrow 44, and the next day 65. You know, that's more than 100. But a lot of factors are in play there. So basically, if it stays below there, you're going to win. You got a great chance of making it work. You got a great chance of this winning and working out for you. Oh, so as it starts to rise, you're going to lose money. But as every day goes, you'll gain money, because this is losing value. It's going to expire worthless. So if you could just put this another trade on to buy this back about at least half, $50, you really increase that probability of success. You know, so the chances of you being right, you know, I don't want to say it's perfect, because nothing's perfect. It's pretty damn good, but you know, anything can happen. That tweet could come out, and then the market, you wake up and it's the Dow futures up 600 points. You'll probably get blown out of position and you owe $900. You know, so that's the danger, but the odds of that happening are slim, because that's actually priced in the market with the volatility already. You know, these values are changing constantly, so that's why it's always a good idea to sell options when the volatility is up. It's priced in, believe it or not, but it's not a great science. You know, it's not I got this cup in the way. That's not a perfect science. Getting getting thirsty. So I'm not going to put this trade on myself, but I got some similar trades. I think let's see. Look at all these SPX trades I got going on. It's crazy. Here's one. Let's clear this out. This is this Friday. The two set to 295 to 800. This is a put. This is part of the 2800 to 2795. Where's the SPX trading at now? Oh, it's right here on my chart. Give me a minute. I gotta walk myself through all of this stuff. 2874. No, yeah, 2846. And that is so we're right here, and as long as it doesn't drop way down there, this trade will be successful, and I will make $155. How much will I lose, you ask? $845. So right now I'm looking pretty good. The chances of is saying that I got a delta. Nah, it can't be a 4%. Let me see something. Let's look at that. Let's look at this trade right here. And you see I already got a set up to buy back. This is it right here. Yeah, it says a delta. So it's basically a 22%, 88%, no, a 78% chance of being right by Friday. So let's see what happens. I do think the market is gonna, this rally, if you look at, what did I put down? Yes, I'm still kind of twisted up. What did I miss? You said it won't be. That means you won yesterday, I think you said. So anyway, if you go to the chart, and this is the daily, I think we're going to go higher. We're going to grind a little higher. There's that red bar already. This is the hourly. It's about right. I just think we're going to hang out here a little bit, and I don't think we're going way up here above the red line. Look at all of the resistance it has to make over here and over here, and by Fridays they're going to do all of that. Like I said, a powerful tweet will blast off, but stochastic is not strong. The VIX is kind of weak. The VIX is saying, nah, we're nervous. So, and that's the trade I put on. See, the VIX is actually spiking now at the end of the day while the market is going down, or going up. So you can play basically, you pull up, I'm all over the place. All right, let's put it this way. We're talking about the SPX. Those are the different trades you can do. This is a simple vertical. You can play it on both sides. And if you look at the delta basically will tell you the probability of you being correct. You could actually change it here and think of swing platform. Probability of expiring out of the money. There you go. So right here, I have a 77 chance of being right that this is going to expire out of the money. So the odds are in my favor. If you just let it play out. Now, what you can get scared, right? The stock will start to tumble, and you get close to your position, and you start owing a lot of money, because there's also another probability. And that's a probability of touching. Now, that can make you nervous. See how it changed? The probability of touching is 44%. That's pretty good, and it's almost half the probability of being right. So there's a good chance it can go up there and touch my strike price, but that will happen so fast. Most likely, the next play will be going down. So you have to kind of play that. You have to always have that back here. So you have to know what you want to do as a possibility of it getting tested, meaning the stock price will drop close to this 800 number or even touch it. And at the time that happens, your spread's going to be worth a lot of money. You got to buy it back, right? So that means you're losing. You're going to buy it back at a higher price. Double D, am I explaining this right? Because I'm not the greatest teacher. This is why I don't talk this stuff. But I think I'll try to talk a little bit about the kind of trade you did. So this is short term. This is 3 days to go. And the pricing that I'm looking at is actually pretty good. I'm like, you know what? That last trade, I got $1. I could get $1 for that. Where was I at here? I'll put it on again. Oh, shoot. What was that, the 2,900? There it is. But I did 2900, 2910. Now it's 90 cents. See, that trade already made. It's already made $10, right? It's already made $10. So $15 now. So the market must be going down. And that's the probability. This is gonna go whittle its way down, all the way down to zero, and you can make that money, right? And then you just buy it back when it's at $50 and be done. So yeah, I'm playing around with the short term. Hey, thanks, man. I'm playing around with the short term trades, and I'm saying to myself, I got Amazon on. I got a lot of trades on right now, and I'm thinking I might just mess around with the SPX and just forget about everything else. I'm really thinking about that. I still like trading Amazon. Yeah, so I'm thinking about that, and I'm thinking about short terms. If you look right now, you can see all the positions I have on. So if you can see that double D, I got all the options out, right? I got a 3 days, I got the 10 days, I got 15 days, 31 days, 37 days. So I'm kind of laddering these trades, and I got some of iron condors, some are just calls, some are puts. It's kind of whatever I felt like doing. So basically, the way I do it, and I'm not necessarily saying it's correct, you got to have like a thesis. So you say, wow, man, it looks like this is bouncing back, right? Or let's put it this way, it looks like it's bouncing back. I think it'll start to go higher. Basically, I think, first of all, I think the market's going lower. You got to decide which way the market's going. It's going lower, in my opinion. I'm going to even draw a line. I think it's going lower down here somewhere. I don't know how low. I'm thinking that right here, the next Fibonacci level. So, but I think it's going to bounce up a little bit, and before it comes back down, what time frame is that going to happen? And so basically, my short-term time frames where I think it's going to go up today, tomorrow, maybe the next day, and I've been selling puts under the market. Don't necessarily like selling puts when the market is up, but I'm like, you know what, 3 days later, I think I might be able to be safe. And this is where you have to make a choice, because it's better to sell into that strength. If everybody's selling it off, sell puts. If everybody's buying, sell calls, because most likely it's gonna snap back to the normal, right? It can't sustain constant buying. It will pull back. So you be a contrarian a little bit, but you have to decide how you want to do that yourself. So basically, the longer term trades that you saw on this trade is I was selling calls into that strength, because I know after a week or 2 or 3 it's gonna go back down. I don't know it. That's what I'm thinking. That's my analysis. So I'm selling calls a little further out, and hopefully it drops back down, or just even go sideways. That's the thing about selling options. It can go up, it can go down, and it can go sideways, and you can still be right and make money. So if you buy a stock, the only way you make money is if the stock goes up. It's the only way you make money. You lose money when it goes down, and if it goes sideways, you made zero money. So you just wasted your capital, right? You could have it in a bank making interest, a percent or two of interest. So that's that. I'm checking out. You got nice on rotate, nice. You're rotating in and out. Sell now or buy short term. Sammy, what do you mean? Sell now or buy short term? I kind of don't understand. We're talking about selling options, and I kind of don't know what you're saying. And nice on your rotating in and out. And double D, I kind of don't understand what you're saying. Are you talking about how I'm laddering it a little bit? How I'm just kind of going out in time and doing, like I said, some is iron condors, some is calls, some is puts, and I'm all over the place. But I try to keep my delta at 0. So if you look at, let's go to the analyze tab. Let's look at the exact trades I got on. Let's see where my delta lies. I've got everything selected and turned on. And if you see, my delta is only 5. It's -5, right? Meaning basically for every dollar the SPX goes down, every point I'll lose I gain $5. I take it back, which is minuscule. But look at the data. The data is positive. Data is time decay. How much time decay you're gonna get? And I'm getting $78 a day, and this is all of those trades. And for the most part, it can go up or down. I'm gaining $78 a day, and I'm only losing. I'm basically nothing. If the stock goes down, I'll make a little bit money. If it goes up, I'll lose a little bit. But it's not going to be, the data is way greater than the delta. And it's always good to have, my opinion, a slightly negative delta because stocks go down hard, right? Even though today is a hard up day, that's unusual. That's unusual to just be up 2%. It goes hard down. It goes down harder than generally goes up. Like the elevator down, take the stairs up. But the way this market's been lately, it's the elevator up, the elevator down. It's crazy. And that's why I had said it in a video back in the day, back a little bit ago. I was like, man, I don't like the volatility. Look how big these bars are. Look at the size of the window of the movement, the average true range. That's what it is. Every day, just boom, 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 boom. So these are big days, and that's because the volatility is up. I generally don't make a lot of people that sell options like, oh man, I love the volatility, it's great, but you get better premiums. I don't do that well when the volatility is great. I try it. You see the trades that I have on. I'm reading a comment. I mean, I have 10,000 and thinking of selling what your data is telling you. Hey, you got to make the trades on your own. This is for, what do they say? This is for educational purposes only. We're talking about an SPX. We talk about SPX options. Like I always say, I'm a nobody. Don't follow me because you will lose money. It'd probably be better to fade me. Take the other side. But I'm just talking about the trading options. What the data, like you say, is saying, and that's what it's saying. But you got to remember, like that trade I said, oh man, it's 88% of you being right, but there's also a 12% chance of you being wrong, and that 12% will take 900 of your dollars. Okay, so that's the risk, So you can't let it take the whole $900. You cannot let that happen, else you will never make money. It'll be a equal sum game. So let's say you do all your trades at 90% chance of making it. You'll be right 9 out of 10 times. Meaning out of $100, you'll make $10 every single time you're right. 9 out of 10 times, right? So you have $90 in those 10 times, but that one time that you're wrong, you will lose $90. The other 90, you made 10, right? You'll lose that. So therefore, in 10 trades, you made 0. So that's the zero sum. So to stop that from happening, you have to get out of it. You can't let it take all your money when you're wrong. You got to say, you know what? I'm out. You just got to feel it. And just get out. Don't let it take all your money. So, but I tell you what, the short-term options, double D, the short-term, that's the danger. Because if we wake up and boom, it blows through our strike price, these options could easily be worth double, triple, and we're gonna have to buy them back. and we could take max losses, so when you have time in your horizon, that's when you can kind of say, you can move things, shift things, but when you don't have time, that's the gamma risk, I guess they talk about, is boom. Let's say you sold something, next thing you know, a big move, it's worthless. You thought you was in the money, wake up, boom, it's worthless. So that's the danger. So I'm playing with it, I'm toying with it to see what's up. I do like short. My sweet spot is the 15 to 30 day. I like trading options in there. I don't like going out 45, 50, 60 days because I think if you have more of the 15 days, if you have all successful trades in there, about time, if you did that every single week, when you get to the 45th day, like a 45-day trade, you would have made more money than just going out to the 45-day. What it allows you, though, is to get a little further out. But you know what? We can't predict how like 45 days from now. I think those are bad predictions on it. If you're reading Delta, we don't know where the hell this market's going to be 45 days from now. That's a long time with the VIX this high, right? I mean, 45 days from now, this thing could be down 300 points on the S&P. That's crazy. So I like short term. We could see. We know we might wake up and it drops 500 points. It's not going to be super dramatic. 500 up, 300 up to, we can kind of see that. But 45 days out, who the hell knows? You know what I mean? It could be a terrorist attack and it drops 2,000 points. It could be crazy. So that's why I don't like the longer term ones. I like the shorter term. You have a little visual. It's easier to predict, I think, what's going to happen in the short term than the longer term. I think I'm just rambling. What do you think about Uber? I heard it's up today, and I think, Uber, what does it lose, $1 billion? I know Lyft loses $1 billion a year, I believe. Uber loses close to it. They don't plan on making money for another 10 years. If you're just buying stocks, and this is my little thing I learned from people I read about and stuff, and it's pretty true. Don't buy a stock that don't make money, period. If you stick with that, most likely you'll have good picks because you can eliminate so many stocks. So why invest in something that don't make money, that lose money all the time? So that's my little thing. The first thing I want to know when I'm buying stocks, just regular stocks, not necessarily trading options, is, does it make money? Think of your friend coming over. Think of it personal. It's like, we think big companies, they losing money. Where do they get this money from? Next thing, they could go bankrupt. So think of your friend coming over here, knocking on your door. Hey man, can you help me out? I'm trying to think. I'm trying to start a window cleaning business. I've been doing it for about 5 months, and can you buy me some? I need some help. You buy me some window cleaners and things and like that. And you're like, how are you gonna pay me back? Well, I don't really make money yet. I make kind of money, but I have a lot of bills, so I don't really have money. So you see what I'm saying? So if I give you this money for these squeegees, you need $100 worth of squeegees, you don't think you can pay me back? I can pay you back once I start making money, because I'm losing money every window I clean. So it's almost like, well, then why clean the windows if you're losing money for every window I clean? Because this guy, he's the CEO of this big building. There's a lot of windows, and one day he says he's going to give it to me, and then I have more windows to clean, and then I can finally make money. It's all you guessing, and I think I'm all over the place. But bottom line, I think don't buy stocks because you see the questions, it's just crazy. In my personal opinion, the drivers want more money, right? They paying them half. They're already paying them half fare. If you take a ride for $20, the driver's only getting 10 of it, and they still losing money. And the drivers want more money. The only way I think these companies are going to make money is when they get rid of the drivers. And that's why they're trying to sell, this driverless cars. That's why they're racing towards the driverless cars, because that's what's going to make them make money. Because now they don't have to pay a driver. And I don't think that's going to happen. So I think they're going to need drivers. So therefore, they're always going to lose money. They've been in business for 10 years and still didn't make money. This is why they went public, to get more money. They're just burning cash, right? So they had to sell some of the company to get money, and then even then, everybody that has lost money, $45, and now it's $37. It's up today, but I think it goes way down. It makes no money. There's no PE. It's a negative PE. All right, so there's my Uber rant. I don't think Uber and Lyft. I don't know. Maybe in the future. Another thing, man. To me, these are just taxis. They straight. Why are we so excited about an Uber or Lyft? Before, you pick up the phone and you call a taxi and they come. Now you just pick up your phone and you just touch, and they come. It's the same thing. There's no innovation. Before you call, hey, can you come pick me up at such and such address? And they say, okay, be there in 10 minutes. Now you just pick up your phone and say, boop, 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 okay. And then it tells you when they're going to be there. Generally, there's more, you get a faster pickup only because there's more cars out there. There's more people wanting to do it. But you ever try to get a ride when there's not a lot of Ubers out there? It's going to take a long time, and the price is super high because of the surge. So, I don't know. I just feel it's the same thing. I feel it's a cab. It's a cab that you can do on your phone. You know, anyway, rant's over. I hope that helped you out, Sammy. So, I don't like them. I don't like them at all, man. I think it's just hype, and they should have, as they say, they should have went public a long time ago. When now we see that they're not going to make, so they opened here and they're straight down, and it just look just sarcastic. Remember, also at 45 is where it opened, right? There's the 45 line. It opened down at 42. All right, so the IPO was at 45. It opened down at 42. Everybody's immediately that got in early lost money. They're losing. And they say, oh, please let it go back to 45. Meaning there's so much selling pressure that how could it even go higher? So it opened down. People bought in. Oh, I got a great price at 42. I didn't have to pay IPO price at 45. And then now it's even below that. Now all of these people over here lost money. So let's clear this out. Here's a good example. Let me get my box out, and here we go. Right there. Is right here the price? Okay. So basically, for this box, my box. I lost my box. Here we go. So basically, stay there, box. Okay, everybody in that shaded window is losing money. Only these few people that bought here have gains. So that means all of these people up here want to sell. They want to sell as soon as it goes up. So it's going to be hard for it to have any kind of trend going up because all of the sell pressure. And don't forget about the people up here in the yellow line of, all that bought it at 45. Man, they know they made a mistake, like the huge funds, the hedge funds and all that stuff. So soon as this thing reaches that 45 strike price, oh man, there's going to be all kinds of selling going on. Because they're going to get out and say, whoo, I ain't messing around with rideshare ever again. There's going to be all kinds of selling going on. So actually, the best place to get in is when it's above that whole IPO. Let it go above $46, and then it'll probably continue to go higher, And then the 6-month lockup period, right? I think it's going to have a lockup period, and then that means all the insiders, they can finally sell their stock or whatever, and then they're going to have all that selling pressure going on because they feel now if they hold it, it's going to go to zero. They want to get out. Anyway, so there's my rant. Oh, that was a long Uber rant. Let's see what Lyft's doing today. So Uber's up 1.70. Lyft is up 5 points. Now Lyft, though, I think 5%, I should say. Now Lyft has been out for a while. They already lost like 40%. So I can see them being up more, from here. Let's see, that's 62. Why is it not showing me? Here we go. Let's say that high. Can I take that high down to the low? Shoot. Bring this down. It always does that on me. This high to the low. They already left. Yeah, they lost 46%. That's a lot of money. That means because it's almost 50%. You almost have to double. You need a double to just break even. You need 100% gain just to break even. And that's crazy. It's probably not a bad point to I don't know. I was gonna say to nibble. I don't know. I think it needs to trade longer. Yeah. Let's start seeing make it higher highs. You know, can it reach a higher high anywhere? And it didn't do that yet. I think maybe once it reaches a higher high, and then maybe to be extra sure, a higher low, then that might be a good time to get it. So let it beat something, and then come down to something that's not as low as the other one. There's your buy point. That's a good point to experiment with. So anyway, we was talking about the SPX, you know, and trading options. So I was saying I might just stick with that. I might just stick with this. I always wanted to, but I might try it. I'm gonna put more trades on with that, and then just kind of see and see what's up. But also that, the Qs, and the SPY. So those three, and the RUT. I did the same. I did some RUT trades as well. Let's see if I can bring them up. And the RUT is the Russell 2000. Look, there's my little iron condor, short term, 2 days. Let me see, expires Friday. Could I zoom that out? We're right in the middle of that one. I'm actually afraid about this one because as hard as it dropped yesterday, that made me nervous. That was a crazy drop. That was crazy. You know, so this spread right here can make $400 if it closes between here and here. I'm gonna close it out with a profit of $200 and $600. Lose $600, make $400. I think that's a good trade-off right there. Right now it's looking good. It is looking good. Where's my delta? Do I have it down here? My short deltas is I hate when it doubles it. Is 19 and 12 or 11, I believe. Let's pull it up, see if I'm right. I was guessing. Because if you buy, I had 2 of those on. If you buy multiple, it kind of adds them up. No, see, oh, I got the probability of touch on still. Bring up the delta. Yeah, my short over here is 20 on the call side. My short over here is, see, I was wrong. It's 30, 29. So let's see. Let's see what happens. And I don't want it to go to expiration. I just want to catch a little bit of that possible 400 and I'm out. You know, so that's my plan. So if that plan is going to work as long as it don't have no major move. You know, like yesterday. Yesterday was a killer. Look at that move. I'm bringing it up now. Look at this move from yesterday. Bam! Look at that drop. And then it just trended lower and then went up a little bit and closed on a low. And, you know, we just got half of that. This thing is up 1.5% today. And we only got half of that drop back from yesterday. So, you know, that's generally the normal retracement. So what's going to happen next? I don't know. Where's my Fibonacci? All right, so let's go from that high to this low. Yeah, we are approaching that 50%, right? 50%, 61.8% is a good resistance. And is it going to turn here or turn there? It's about to turn or go sideways. I don't think it's blowing straight back up to this high. Anyway, so I'll go ahead and end it. We talked a little bit about options today. Let me know what you guys want to talk about. And I appreciate you, Sammy, for checking in. Double D, as always. You're always here, man. Appreciate that. I was on Periscope, too. I do some Periscopes when I can, when I'm not on YouTube. But sometimes I have phone connectivity problems. So I'm actually doing it right now on my tablet. And just so more people can know when I talk about, I have no idea what I'm going to talk about when I get on here. I don't have a game plan. I just talk about some of my trades, just things. That's why it's Let's Talk Stocks. Maybe I should change it to Let's Talk Options, you know, because I don't even trade stocks. I'm totally out of stocks right now. Like I said, I sold 401ks. I have a bunch of stocks in an M1 Finance, sold them all. It's actually sitting in the reverse SPY fund. And so I'm getting a beating today, and that I ain't even look at it, but I imagine it's getting a beating, and I don't really plan on let me pull up the SPY. I don't plan on going back until this thing shows some kind of bounce back. Look at the trend line, how it's broke. You know, damn, I got the wrong thing on me there. You know, this is from the December 24th lows, and I mean right here, it's broke trend, so this might bounce back up a little bit. I don't know if it gets to those highs, and then boom, this comes down a little bit more. That's my guess. Especially as long as there's tariffs out there. I think as long as those tariffs out, it can't make a new high. How could it make a new high when it made a new high before there was no tariffs? We thought the market was going to be good. Tariffs is clean, right? Everything, economy's chugging along. How could it get back to that point with tariffs? With 25% tariffs? I just don't think it can. Apple's got to sell $250 more for a phone. That's crazy. Anyway, all right. Double D. You're closer than I'm brave enough to go, but I think you can still win. I'm trying to stay between 7 and 10 delta if I get the decent credit. Yeah, my plan to be a little higher around that 30 is to not bring it to expiration, just to get a little bit of that money. So I'm going to check it out tomorrow. I want to get at least half. Actually, not even half. I just want, what did I say? I make 400 on that Russell. Give me $100 and I'm out. So I'm hoping, I get some rapid, now that the volatility came in a little bit, I'm getting some rapid depreciation, of the spread, and I could buy it back cheaper. So not necessarily the whole thing. So that's my plan. So let's see what happens. You're trying to bring it almost, I think, all the way to expiration. And I think that's your plan. And you'll probably succeed with that 10. And that's what I did when I started the video, the other trades, what I traded the 11, I think the 11, the 10, and I did it on, did I do it on both sides? I think I did it on both sides. I'm not sure. Maybe just the call side. One of them I did, and I really spread the wing out, meaning the protection. So this one, let me see. No, it's not that one. Maybe, I know it is, the 15-day. That's the one. I went 15 days out. That's not the one either. So I'm way up here, 29.20. No, it can't be. Is it the 10 days out? Yeah, look at that spread right there. Right, so I sold, this is at a 12 delta, okay? The 29.25, and then I got the 29.55. So that's a 30 point wings for the most part, where the protection is. So that's $3,000. I collected, I don't know, let's say I collected around $3. So 300, risking 3,000 for 300, and hopefully get out in half. So I'm playing with that as well. We can analyze that. Is this the May 24? I got so many on here. I don't can clear them all out. May 24. I selected the 235. I thought I collected more than that, and so I'm risking 27.65 for 235. I think that's 11%. 235 divided by 27.65, 8%, even less than that. So that's 15 days out. Yeah, I think I'm playing with that trade as well. Hell no, I don't plan on this going to getting the whole value of that half. I got the order in to buy it back at 117 or something like that. So at 115, because you can't do pennies like that. 115. So if this thing even gets to 30 delta, 30, I'm out. I'm out. So I'm not going to play around with this one because I could lose $2,700. I'm not trying to do that. And that's on the upside. So Hopefully, there's no rip. There's no rip up. Where's the what is that? This is my short strike. 29.25. Yeah, right there. That's where I'm at. 15 days out, is it going to get up to there? That is challenging the highs. So I think as long these trades work well, as long as it don't rip, as long as it don't do one of these. I don't want to see one of these, where it's just going straight up. If you're going to go up, do something like this, and then I can make money on that trade. And this is where I've always been getting, my call sides are not as successful as my put sides, because these markets, if you look at all of these rips, look at how steep they are. It's just, the whole thing has been steep. And that's why I don't like volatility. That's why I just lose money in volatility when volatility's up. I'm trying to go back to the weekly. And then over here, right here's volatility and boom, boom. I like this angle right here. This little 45-degree angle. That's where you can make the money. Same here. Now this is going to be opposite of what everybody tells you. They love the volatility, but okay, you get more money for your premiums, but these things are ripping on both sides, to the upside and the downside. They're ripping, so I don't like it. Yeah, I got more premium, but these things will go against you in a minute, man. So look at right here. Look at right here. Boom. Right? And then boom. Just, you might say, oh, I don't know if that's the greatest. You might have put on the iron condor right here. You got blown out. And then you're like, oh, well, you just have to be careful. These things are ripping the other way. You might say, hey, it's trending up. Let me go ahead and sell a put spread, and then look at that candle. Boom. Blown out. So if you was trading over here and you did the 45 days out 50, I guess you would have been successful. And I want to do some more experiment with that as well. I'm trying to find my sweet spot. Now, I know what I like. I right at the 7, 15, no less than 30 days, but I want to find the one where I don't even gotta look at charts. I just gotta go in there and say, boom, boom. I sold this delta, sold that delta, 45. Where it's almost just scripted, where I can tell a kid to, hey, go put this trade on real quick, and see. So anyway, the one thing about trading the index, you don't gotta worry about earnings. You don't gotta worry about a single stock risk. But if you look at this index, the way it's been traded, it looks worse than some stocks out there. Man, Apple's nowhere near like this. Well, lately it's got kind of been crazy. Let's pull Apple over the last year. See, Apple's been smooth sailing. Other than this V right here, even this V isn't as steep as the index was. It's been smooth sailing in Apple. So maybe I might have to throw Apple into the mix. But it's a little crazy right now with the tariffs, but just smooth sailing. Yeah, there's nothing, some spikes to the upside. Downside was even slow. Up was even, it's decent. So there you go. Apple. Oh man. Reading Double D, nice, LOL, nice. Set your buyback ahead of time. I did. They already set. I didn't set the Russell, and that's because I don't want it to trigger, because I have no day trades left. And generally, I don't be getting down to the 3 or whatever. Wait a minute. Actually, I think, yeah, I just don't have no day trades left, so I didn't put the order in. And now I know I can also put the order in to start tomorrow. I'll just put it in tomorrow. But the ones that, yeah, I got them set, man. They ready to go. Good to cancel as well. Sammy says, I just sold all my stocks. I'm not taking any risk. I think Trump is still crazy on China for at least a few more days. I think so too. And you know what? I don't think it's a good idea in general, especially if you're just investing for a long term, to sell, to try to time the tops and the bottoms, and because nobody knows. And generally, you nobody's good at that. We'll lose money. But this time I did. So because something I don't know. I pulled up all the way from 2009. If you didn't sell anything and just kept buying, you just until a couple months ago, you made out like a bandit, man. We had all-time highs in 2008. You know, if you was, basically nobody was able to time, up here, I sold here, sell here, buy here. We can't time that. But something's not right. I just really feel uncomfortable now. I just feel, and generally I don't, but these pullbacks has been, I don't know, for some reason I feel the big one is coming. I feel maybe, do we test the 2008 low? Where are we at? Let me go to the monthly. I know we test this. Do we come back and test this? Nah, we ain't test. That's crazy. But look at all these lows, these dips that's untested. Look how it's down, like 2008 is crazy. Up, down, and nice little cups, down, and look at this angle, okay? Look at how steep that one is. And we came down to here, but is that enough? And if you look at the way it looks right now, just look at the monthly. Let me see if I can zoom in from here. Let me get rid of this Fibonacci. What is that? That just looks like right down, a little pullback, and just boom. I think we at least come to here. If not, maybe somewhere down here. I'm just not feeling good. I'm not feeling good about this one. Trump's in office. He got the market ripping, but it's like fake rips, meaning where the debt is so huge. We're 22 trillion in debt. I gotta stop this video because we're going long. U.S. debt clock. Yeah, you see I got it purple links. Look at this, man. Look at the national debt. This is something good to look at. Look how it's flying. We're at $22 trillion in debt. And it's rising. It's faster than we can count and look at it. It's crazy. Look at over here. He talks about, where's this tariff money? It's over here somewhere. Here it is, tariff tax. So far he made $65 billion in tariffs. Total U.S. debt. What is that right there? Is that 73 U.S. total debt? And I think the total debt is it like per citizen, everybody. I think that's $73 trillion. Let me see. Here's million, billions, $73 trillion. You can't. I'm talking politics. I can't believe it. You can't fix debt with more debt. And all you got to do is think about your personal situation. Let's say you owe $10,000 for college or whatever. Do you borrow money to pay that? That's like hard to do. You just can't do it. So once we mess up and crash or whatever happens, that's going to come back to haunt us. And is it now? Is it later? I don't know, but it's coming. We're printing money, and the whole world is, and that's what's kind of making us go up like crazy. It's based on falseness, So I'm a little nervous. I ain't gonna lie about that. And I shouldn't be thinking like that. I like to just look at the charts, and you can see. Here's another thing to look at. Look how, how you have a building, right? And before it falls, right? Here's the building. It's steady. Check this out, man. This is gonna be the best thing I ever did on YouTube. So here's the building. It's steady. And then before it falls, let's say you have an earthquake. Right? It falls. So look at the steadiness of all the years. We don't have these big ass volatility bars like we did in the past. And now it's this big. You see how it's just getting big? It's just gyrating. It's doing this, and then is it going to hold up? That's what I feel that's actually happening. So because it's not like nothing in the past. Even though we had drops like this, look at the month. It's up and down. It's crazy. I mean, the range is crazy for every week, every month, than unlike the past. So that's what I think is happening, and then we get to tilt over. I don't know. I'm just saying. Oh man. Thought on MPC Ying, then buy dog, then buy Ying. You said thoughts on MPC and Ying, is those stocks? Marry my eyes, I need my glasses on. Oh, Marathon Petroleum. I thought that was MRO. What's MRO? Marathon Oil. Okay, Marathon Petroleum. Going lower. I just looked at it that quick, and it's so simple. I mean, it just broke support. Look at that, right there. I mean, this thing is going lower. Look at the stochastic. Look at the volume on the breakdown. It's going lower. There, that's simple. That was a quick one. I just glanced at. Look at that, man. Oh man, this is this is a textbook short right here. Textbook. Look, it comes down, hits it, right? Comes up. Look at that candle. It can't even bounce. And then it broke. We already saw on the weekly that volume is up. So this month, by the end of the month, the 15th, volume is going to be way up on the breakdown. And if you just look, I don't know, I guess we come down to this $43 right here. Yeah, maybe right here. I guess right there first. So 47 to maybe 43. But yeah, this thing is going lower. If it pulls back, if it buys, if it goes higher, in my opinion, maybe it's the perfect time to short to get in. But oh man, that's ugly. You should have acted in the Game of Thrones. Why you say that? YING. I guess that's not a stock. Ying. YING. Yeah. Winter's coming. Don't understand what you mean by that either, Sammy. Winter's coming. All right, so that's the deal. That's today's video. It's long. You know what happens on long videos? Nobody watches them. So, man, I appreciate you guys watching and sticking with me watching this video, man. I'm at 1 hour and 7 minutes because people look at the replay and say, oh my gosh, I ain't watching that. But I don't necessarily make it for views. I get a lot of that in my old videos. I got videos that got 500,000 views for, I got like, this channel has over 3 million views. So I don't necessarily go for the views, and I'm just going for the people. I really want to talk about to the people that like talking or just looking at this talking stocks, because there was somebody I used to follow. He don't do it no more, and I used to just love watching, even though I didn't even believe half the stuff he was saying. I don't know. I just like it so much. I just like being surrounded. So there's some guys that I listen to where I just like listening to them. I could be ironing my clothes, washing dishes, or whatever. I'm listening to them, just kind of hearing what they got to say. I just love talking about it, hearing different things about it. Disney, I think, is the new S&P 500. Disney had a huge breakout. It's even doing well today. Yeah, 1.62. Look at this. I talked about this in my past videos. I can't even go back far enough. Just like we talked about that Marathon Petroleum, turn it upside down. And see, I already got the lines drawn. Look at this breakout. Look at that huge breakout over this multi-year I can't even think. Consolidation. This multi-year consolidation. 1, 2, 3, 4, and it finally broke out. That's why it broke out so hard. A little pullback. What's going to happen is, think of it as legs. This is the A to B leg, and this is why this line's drawn. A to B, B to C, and then C to D. Generally, we will get this leg to the left, the length of this leg, just like over here, the same length. So I think as you put money into the market, a lot of people put it in the SP 500 or whatever, put it into Disney. That's why I called it the new S&P 500. Because Disney is making money. They killing the movies. They killing the park. It's like everything they doing is this full blast perfect. Only thing they doing is losing subscribers on cable with the ESPN, but they got the ESPN Plus going. And then now the whole ESPN, the ESPN Plus, and now the Disney Plus, what are they getting ready to call it? Disney, the channel for like the Netflix. That's getting ready to kick off in November. I think I think they running on all 4 cylinders. Everybody knows it. That's why this was a crazy, for a stock like this with a multi-billion-dollar company, it was up 30%. 20% what is this, the month? In 4 weeks. That's crazy. So I think you get a consolidation, maybe a slight pullback, and it goes higher. And if you can get this thing, if it comes back into range, oh man, I'll put all my 401ks and stuff into this one stock alone. That's how confident I feel about Disney. I think this is the best stock right now on the market. Disney pays a good dividend, right? 1.32 dividend, even making dividend money, right? So it's not like an Amazon, no dividend. Anyway, they bought Hulu. They got controlling interest today, and they buy in it several years from now. They NBC, Comcast is selling them the rest of their Hulu, because they already control Hulu. They got over 50% of the shares or whatever, but now they're getting most of it. If I believe I'm right, not 100% sure that they're getting most of it. Basically, they own Hulu, right? So they're coming out with the whole ESPN Plus. They already got the ESPN Plus, and now the Disney thing. I think they're gonna dominate streaming. And then you see how well these Avenger movies is doing, this Endgame movie. This stuff is gonna be free. When they launch these products, all these Avenger movies are gonna be free on their channel. Well, you're gonna have to subscribe to it at $6.99. And I think that's a try. I think that they're saying that's the price. That's the price to get you in, to get you to play with it. Then they're going to jack it up to 11, 12, 13, whatever, like Netflix. And Netflix is not going to have all the Avengers. It's going to be there, right? And everybody's excited about that movie, or those movies, or the series, and Star Wars. And I think another Star Wars movie is about to come out. That, and so they got a good franchise. Everything is going, and they're going to use that power to blow Netflix up out of the water. And now they got Hulu. I like Hulu personally. I don't like Netflix. Netflix sucks to me. I have no idea why that stock goes up. It gets boring. It's old stuff. I like Amazon movies better. And then I like Hulu. I always watch Seinfeld and Hulu because they got the TV shows and stuff. And I don't know about the Disney because I don't have it. But I think they're positioned to be better than Netflix and anything else out there. Right? I was short Netflix and got burned. I always get burned playing around with this stock because see how this almost looks like it wants, it's almost like a cup and handle. It almost looks like it wants to go higher, but then this candle right here looks like it might be a fake out. So see, it's like a cup and a handle, and it looks like it should maybe want to go higher. So I don't know. I get burned on this stock all the time. I think it's Stochastics is saying it wants to go lower. I don't know. I think it's eventually going lower. I think they're gonna they've been going higher on subscriptions, and now I think they're not going to be growing subscriptions because Disney's going to be the one growing subscriptions. I think people are even going to lead Netflix and join. Because how many could you buy? My personal limit is 3. We get Amazon already because we got the 2-day shipping. So Amazon is a given. There's 1. I like Hulu because there's different TV shows and it's a little cheaper in price and they got cool movies as well. 2. So now it's up to Disney and Netflix. And let's say I had Netflix. 3. I don't think I'm buying Disney. I think I gotta cut one of these others. So me personally, I think 3 is the limit. What's your max on these streaming services? Yeah, I don't think there's room for everybody. Because then why get rid of cable? We all cut cable, and we're streaming these things. But now it's going to be the price of cable again. Because remember, you got to pay for the internet as well. So we'll be back up there with cable prices. So to keep our costs low, I've been a cord cutter for over 5 years now. To keep our costs low, we only can stream a few of these things. A lot of them got the same movies. But that's what I'm talking about. Disney is not, because they're pulling all of their content. Disney, you think Jump Dumbo, you think these cartoons, and they have a huge library of movies that you don't even know it's Disney. So, yeah, I think they position to really knock it out. Disney will have Netflix pricing a couple. Yeah, that's what it is. They're sucking us all in. $6.99. Oh, let me join. And, they're gonna get us used to it, and they're gonna us with a lot of free content. They might even do something like, let's say a hot movie comes out like Star Wars. I don't know, another Avengers movie. They might not. Let's say they forego the DVD. People want to buy the DVDs, and it's only available on Disney Plus or whatever. That means everybody's going to be buying Disney just to watch this movie. And they're getting you in there, right? And then might be a little tough to cancel. You might not want to cancel. Maybe they do something like that. So they definitely have the movies to get us in there. And then if they pull content from Netflix, and Netflix also is spending, they might have a few shows that's popular, but they're spending billions for these shows. Millions and billions spending for these shows that get old and you don't even watch them no more, and they keep doing this, making their own movies and shows. It just seems like they're going to run out of cash. They're going to be a Tesla or something like that. Next thing you know, they need money. That's my personal opinion, by the way. I don't know what the financials look like for Netflix, but all I know is it goes up on subscriptions only. They don't even worry about the money. What's the PE? 124 PE. Okay, yeah, that's something we want to buy, right? It's going down, but I don't know. This chart's looking kind of nice. It looks like it wants to maybe go higher, maybe before lower. I thought that I gotta end this video. I thought this was it, and I think this is where I got burned with the short somewhere because of that bar right there. I thought this was it. Oh, it's done. It's done. And look, it made a nice recovery, and now it's consolidating, so you never know. All right, yo, so thanks for watching, man. Thanks, Sammy, and I had Marine Young, is that a stop? WKHS, Workhorse. It looks like it's got support. Just by look, this is my first glance. But then look at oh wow. I don't know, it might go somewhere, but look at this topping tail kind of, a lot of selling happened up here. You know why? Because all of these dudes over here, see, look at this. Throw this little box, kind of bring it over here. See that? And that's what that tail is all about, because all these dudes over here wanted their money back. They all wanted their money back, so there's pressure. The same right here with this tail right here, right? So maybe, I know this seems weird, but maybe if you can get above all of this somehow, then maybe you could dip your, it might be a buy. That's what I see. Because it might just crap. I mean, this thing been, I don't even know what it is. Workhorse Group down 8% today. Can't be right. It's down 8% today. Yeah, I don't like it. I think it needs to get above that area. Let's get above all of that resistance right there, and then if it's still kind of going high, maybe you could dip your feet in. But those people are going to be selling, and that's exactly what's happening and why it's down. So anyway, all right, yo, thanks for watching, yo. Come back, Young Marine. I appreciate you doing some chat, talking stocks, man. I like it. Sammy, come back, man. I've been putting these videos out every day. I try to do it between 11 and 12, but I'd be late. But if you hit that notification, you'll know, right? Subscribe, hit the notification, you'll know when I make the video. Every day. I've been doing it every weekday and possibly on the weekends. And that's what Periscope, I want to do more short videos on Periscope where I talk about a specific stock or something like that. I'm just a dude that trades. I lose money, okay? I make money, I lose. I'm not no guru and I make all of this and I'm trading on the beach. Going to the beach, I'm done. I'm not that guy. I trade 15 minutes a day, the first 9:30 to 10, and then I'm done. I made my 300. I'm not that guy. I do longer term trades, 15, 25, 30, 40 days, whatever. And I don't day trade. I suck at day trading. And I just trade. I do make money, but I also lose money. So that's what I'm saying. I'm a regular guy. And with the volatility of the stock market, that's why I don't like volatility, because it's hard to predict. It's just hard, especially when you're thinking something's going to happen and a tweet changes the direction. I put on a trade because everything looks good and a tweet changes the direction. That's crazy. I just suck at that. So anyway, all right, so thanks for following me, man. I appreciate everybody watching. I went 21 minutes. It might be the longest video I ever put out. Let me know. Hey, you know what? I'm going to put an alert on this Workhorse stock where it's above this 373 area. And then I'll come back and look at that because it could be interesting. You never know. All right, so thanks for watching, everybody. This is Dre, and this is the Let's Talk Stocks Show. See, I'm out of breath. Need some water. Thanks for watching, everybody. I appreciate it. Come back tomorrow. See ya. Good. Happy trading. See y'all later, man.